Good morning, everyone, and welcome to Morning Market Movers, where we take a look at hot spots in the markets for today and do some live analysis for day trading. It is Thursday, March 17th. I'm Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. Uh, a little bit of a quieter morning this morning than we've had this week. Uh, the markets aren't making big volatile swings at the moment. Bank of England did raise 25 basis points overnight, not moving the pound too much. We've got initial jobless claims in the U.S. came in lower than expected. Markets kind of not paying too much attention to that either. Although the equities are looking to open a little weaker this morning, that's more likely coming off the heels of two fairly significant rally days, and we're taking a little bit of a breather here before the opening slightly lower. The other place where we're seeing some activity is in oil. We're definitely going to jump into oil because oil, did drop down close to $94 a barrel yesterday, and overnight it just rallied all the way up. It breached 100 again. Some of that's on some news out of the IEA, the International Energy Association, saying the Russian war is going to cost the markets about 3 million barrels a day from Russia into the supply chain for oil. Now that's not a lot, in the grand scheme, um, but that did spook the markets, and we've got oil rallying $6 off of that. All right, before we jump into the charts and really take a look at some of the technical levels, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, Brian, I'm going to flip it over to you. We could take a look at what other few headlines are out there, but
hmm
not really a lot. And then we can just take a look over at oil and the equities and
Sure.
and let people at it.
Yeah, I mean, Aussie dollar is the only currency pair right now that really has much movement out there. And again, this is also, you're seeing gold rally back a bit, and a lot of it is the fact that everybody was extremely conservative yesterday, and I think a lot of the markets were like, "You're going way too conservative." I guess starting off with yesterday, obviously they raised it to point 0.5. It was just a 0.25 raise. Markets, kind of did. It was a very predictable. I mean, here's the dollar index. You can see that the initial response was right here at 2 o'clock. You can see the initial response was, "Oh, we're raising interest rates. Okay, great." It had an initial spike and then it collapsed very, very fast. And people will look at this like, "Well, why did it go negative?" I mean, there's the spike. Everybody tried to buy this, and then it dropped. It dropped because that was the part that was already factored in. I think people were still hopeful for the 0.25. So, again, in standard news release fashion, and again, just so everyone understands, this green candle here, the first green candle before the red, is where the statement came out. So as you can see, it was rallying up, rallying up, rallying up, rallying up. Statement came out. It's like pop. Everybody's buying this. Going long dollar. And then all of a sudden, bam, it collapsed back down again. So what the market was really looking for was the 0.5, not the 0.25. Again, this would be considered a disappointment. And what's interesting is if you look at the indices, look at something like the ES, like, you know, take a snapshot of this picture, look at this, it's the exact same scenario. What we saw price rally up, and then what did it do? The markets went down, 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 down. It actually came to a level that we had talked about, the 61.8 level. Here was the FOMC was straight down. It was like, oh my God, they raised interest rates. That's bad. And then it was like, it's 0.25, and then shot right back up again. At the end of the day, all it did was kind of go back, grab a retracement level that we had marked off. And we also talked about 43.64 as being the last area where we had a tested level of sellers. And that's exactly what we ran into last night at 4:30 when the market closed. And now we're kind of chipping our way back down again, probably to come all the way back down to the 42.60 level. Because again, war, everything else. So it's interesting that that's what ES did. NQ did the same exact thing. It had that initial drop down, and again, ignore this. This was an opening base trade yesterday. It dropped down very, very fast, and what did it do? It shot straight back up again. And I talked about how we would hit 14,000 yesterday. We hit 14,000 yesterday, and now we are pulling back down again. Again, you look at this and say, hey, this is like a parabolic retracement. Yeah, it is, right? And now we're kind of grinding back down, and we have the same issues that we had yesterday. Rising the interest rates didn't really do much, and I'll explain why. We're probably going to continue to push back lower. And then again, YM, same thing. We had the initial push all the way down, all the way down, all the way down. Statement came out, and boom, it skyrocketed up. And you're like, that's the complete opposite. Yes, it is. The market had already factored it in. The market actually wanted more, and that's why this was a very, very easy kind of long, because it's not enough. And then Russell, same exact scenario. We talked about 2026, and it kind of hit it and is rolling back down. Now,
I mean, every one of those charts is nearly identical.
yeah, they're basically exactly the same. With that said, they're also kind of very, very similar to what you see in the pound dollar this morning, how it was going up, 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 and they just raised interest rates, and now it's shooting straight back down again. Here's why, okay? And they're all basically the same, okay? Obviously, this is the Bank of England, not the United States, but the scenario is the same in both countries, okay? They raised it from, a 0.25%. Now, understand, too, the UK has already raised it. This is, I think, their third raise now, right?
It is the third.
Yeah, it's their third. Here's what their second quarter inflation is, around 8%. So they've already raised it 0.75, and they're still expected to have an 8% inflation rate. And again, because of supply chain problems, they're expecting it to go even higher. Those are all the headlines out there that, where is it? Even the ECB was saying, yeah, we're expecting inflation to go even higher. So we've already had three, and you can see, look, Brazil actually, again, Brazil is not a major player. Brazil just delivered a 100-point rate hike. Pledges the same thing in May. So Brazil is going 100, 100 right in a row. Where we're arguing about 0.25, and we're stuck at 0.8. We're stuck at 8% inflation. So that's why you're seeing these reactions in the market. It's nice that they want to kind of quote things from, the Ukraine situation was bad. If you look at the headlines yesterday, all the headlines were that they have a 15-point plan. They're pretty close to doing a ceasefire. They're getting the guarantees that they want. They'll pull troops immediately. I mean, these were all very, very positive things. Tack that on top of the 0.25, all that looks pretty good. So, it's kind of like, it almost feels like they're trying to move on and everybody else is trying to drag them back again. And this is one of those things that a lot of people are like, we shouldn't be there in the first place. And now it kind of seems like they're trying to move on without us because we're not, helping them the way that they want. And, everybody likes to use them as the excuse, but they're not really willing to help. But this is kind of a big deal. 8% is well above mandates. And this is their third raise. And we're like, yeah, we'll raise it another time this year. But it's not helping. It's getting worse.
I would have liked to have seen a kickstart as well. And they're just played it. They played it very safe with 0.25. But we know, they know they got to keep raising. And they know they have to raise them. So maybe next one we'll get a half. But yeah, they did what they said, 6 more raises this year. So a total of 7 raises in a year. It's been a long time since they've done something like that.
It means they're playing catch up, is what it means.
Yeah, but we are playing catch up. It's like, and if you're that far behind the ball, why don't you speed up?
And there was one member that dissented. Yeah, there was one member that dissented that was against the group, who was Bullard, who said it should be a 0.5 raise. And again, there's one dissenter in the UK that also said it should be a 0.5. And you have a guy in the UK. And again, the market agreed with the one guy that dissented. It dropped 120 pips. It went an entire ATR, an entire average daily move in one candle. So the market also agreed that it should have been a 0.5. And that's after, and again, that's raise number 3. So again, it just shows you that there's, and I tend to go with the market feelings. Again, 5 guys in a room are not going to have, they feel that they will have the more clear picture. And it's more than 5, but you know what I'm saying? It's not as many as what the, how many people, how many players, and how much money is in the overall market. A lot of times I feel like the market has a better gauge on things. And when you see disappointment like this, it just goes to show you that, a few people can't make the decisions for many and have all the knowledge and all the data and all the feelings there. They just they can't have their finger on that many pulses. They only got so many fingers. So, this is pretty scary, because if you think about where we are in the United States, and the biggest, what's really crippling us the most right now is inflation. And they're basically saying, hey, Yellen said, again, remember, she still exists. She made headlines last week. We're going to continue to see rising inflation for the next year. Okay, so stop it. You have the power to stop it.
Let's do something about it. Right. So what was with the 0.25? All right.
Yeah. But because of that, gold is also rallying a bit, guys. We didn't get the 1888. I said we were going to get down there. We got close. We got to 1889. I missed it by $5. It has really rallied since the FOMC statement for the same exact reason. 0.25 is not going to slow inflation down, so it's a pro-inflationary environment. Same thing with silver. But oil being back over $100, I told you guys I was still bullish oil yesterday. Reason why is because, again, once we piss off Russia enough, Russia will cut supply. And again, the Middle East has already said we're not going to help you. If they want to do it, great, we support them. So I've been saying that I think it goes higher again. Is this it? No, I don't think it's it, but I do think we are at a level at the 101.93, kind of where we're at right now, where, again, when we drew the high to low fib on the 30-minute, you can see that we're right around that 23.6. And there is a level of basing sitting right there. So, there's a level sitting right there just above. Now, is this an immediate sell when we hit it? I don't like that we're hitting at the U.S. session. Reason why is because the U.S. session tends to be the session that we rise a bit more. But again, it is a session rollover. It is an area where computers and algorithms are going to come in there and say, hey, this is a 23.6, and in the grander scheme of things where we're going to short, this is where it is. But for me, personally, I'm more technical than fundamental trader. I think all the fundamental reasons are out there that this needs to go higher. And again, it basically turned yesterday from the FOMC statement, and they were like, oh, more inflation, great. I mean, that's the exact bottom of oil yesterday was on the FOMC statement. You may say, what the heck does interest rates have to do with this? It just goes to show you with how aggressive of a policy, how serious are they to get rid of all the inflation and energy? The answer is they're not. And that's why we saw oil go up $6 from FOMC till today. So,
Yep. All right. Well, I mean, again, not a lot going on in the markets news wise. We are seeing that movement in oil, and we're seeing equities a little bit weak. Really, the big news was the pound. That move where they were clearly the market was looking for something more than a 25 basis point hike. So
but standard move, guys. It rallied before news, and then peaked right before news, and then it dropped. Again, this is one of the best things to do. Trade, when you're trading Nadex, look for these type of pre-news moves. Look for any type of basing or telltale sign. Because remember, if you want to short something, you always make sure that you raise the price first, and that's exactly. It's amazing when you look at this. It's exactly what the market did. They just took this higher, and then as soon as the news came out, even though they raised, which makes it more, a more powerful currency, tanked an entire day's worth of movement in less than 30 minutes.
Yeah, right away. By the way, if when you're looking at Nadex products, clearly binary options where people are playing a lot of this price movement. If you're not aware of our knockouts and our call spreads, I am going to be doing an educational session later today. If you want to learn about knockouts and call spreads, I dropped the link into the chat. That's going to be in 3 hours. I'll be doing that. Just for those who are unfamiliar with those products. With that, any questions for Nadex, please email us customerservice@nadex.com. You've got questions for Brian. You're kind of curious about some of his analysis and what he's looking at, or how he looks at the markets, and because he's also a mentor and an educator. Please email Brian, support@keeptradingsimple.com. He's very accessible. You got any comments for me? I'm also available. You can email me, todd.rich@nadex.com. With that, again, market's looking to open in the red. We'll see how everyone reacts. We've got oil rallying higher, so certainly some volatility there. And really, there's no other news coming out today. So it might be anything would be
just headlines.
Maybe. Yeah, right. Just headlines from the geopolitical events if anything comes out, or if anything on economic
Way, guys,
policy.
Todd mentioned, binaries call spreads. Just so you guys know, on the small, we always talk about using the 2-hour binaries, typically for news. Just let you guys know, if you'd use the pound dollar in this one, there's only 12 strike prices, and they're only 10 apart. So
it blew through all of them.
It blew through every single thing in there. So we talk about taking it out of the money before something big like news like this. It wouldn't matter which one you got in. It blew every single one of them out to the downside. So
yeah,
they're completely gone. And there is a 7 to 9 a.m. It was a 7:45 release, so you had to take the 7 to 9. It just expired, and again, it blew. I can't even see it anymore, but it blew it completely through the bottom. And I think it was like the middle of the road here is where it was. So that's how you trade news.
If you're looking for, if you need to know, there's an economic calendar I just dropped out there, and you can see when these announcements are coming out, particularly if they're doing them before we come on, because we'll tell you about them if they're later in the morning or throughout the day. But obviously, so being aware of when they are, take a look at the calendar. With that, Brian and I will be back tomorrow, Friday. God, what a fast week. It's a lot going on. Thank you so much for joining. If you like what we're giving you here, please drop a like in for us on YouTube or on Facebook. We do appreciate that. We will see you tomorrow morning. Good luck in the markets, everyone.